Hello, everyone, and welcome to another episode of Banking Experiences Elevated, a Hyosung Innovue podcast. I'm your host, Daniel Litwin, the voice of B2B. And folks, thank you so much for joining us on another episode here in studio of the podcast as we continue to explore major technologies, trends, and market movers that are shaping the financial and the banking industry with the Hyosung Innovue team. As we're getting into today's episode, make sure that you're heading to our website, hyosunginnovue.com. Again, hyosunginnovue.com for previous episodes of the show, for other episodes of Retail Experiences Elevated, and other useful information about our solutions and services, and plenty of other content. So again, hyosunginnovue.com. All right, folks, let's go ahead and jump in. There's a lot to break down today because this is a report-heavy conversation. We have some timely news to unpack and dissect, and then connect the dots with how some of these reports are highlighting important shifts in how people pay and interact with that ritual of paying for a service, paying for a product, right? And understanding how the technologies and the services of financial institutions should adapt, continue to influence, and play a dynamic role with these shifting trends. So, what reports are we talking about? Well, the Federal Reserve released two major reports in the last few months. So the first, the Federal Reserve Payment Study of 2022 triennial data, and the second, the Federal Reserve 2023 findings from the Diary of Consumer Payment Choice. So both of these are critical for gauging both consumers and businesses' spending choices. So this payment study, the first one looked at core non-cash payments used in the United States by consumers, businesses, governments, measures everything from general purpose and private label cards to automated clearinghouse transfers, checks, ATM cash withdrawals. It's very comprehensive. The second study, the 2023 Consumer Payment Choice findings, looks at specifically consumer payment trends, including the balance between cash and non-cash payments, in-person versus P2P purchases, cash holdings, etc. So that's a lot, right? But what do these reports reveal? That's the big question that we're wanting to unpack today. What's changing and what's staying consistent in how both consumers and businesses are interacting with payments and actually going through the payment process? What does this tell us about some of the underlying trends in payment habits and technologies? And more importantly, again, how should financial institutions adapt their services and solutions to match, shape, or reinforce these trends? So let's go ahead and jump in with our guest for today. We're joined in studio by my favorite Hyosung Innovue professional. Don't tell Brad. No, I'm just kidding. Bill Buddy, VP of Banking Strategy and Solutions at Hyosung Innovue. Bill, great to have you back in studio, man. How you doing?
I'm doing well. Always happy to be here. Thanks for having me.
Yeah, it's always a pleasure getting to chat. And I'm particularly excited for these conversations where we can unpack some trends that are very granular, data-rich stuff, because it really gives us that pulse check on the health of the industry, the state of the industry, the dynamics that are shaping Hyosung Innovue's services and solutions, of course, but more widely the financial and banking industry. And I'm a nut for getting into the weeds, so yeah, I appreciate you wanting to chat about this today because it's definitely important.
It's super interesting stuff, and it really kind of, every time these like data-rich reports come out, it gives you a chance to really kind of calibrate where you're going with things, and a lot of times it ratifies some decisions that were made based on experience, and a lot of times there's other times where it really kind of shows a shift that's happening and informs decisions that you've got to make over the next year or two to try to figure out strategically a direction to go that's going to take advantage of those shifts, that's going to be able to accommodate those shifts, whether it's trying to get a leg up on competition or whether it's just trying to make sure you're prepared for the change in operations that's going to entail. So exactly. It's really a great landmark to kind of set your feet on and really kind of look forward for a strategy for the coming years.
Totally agree. So let's just go ahead and get into it because there's a lot to unpack without getting too in the weeds, because we'll obviously do that here in just a few minutes. But what are your just general takeaways from these two reports? If you had to just summarize after reading them, what was that synthesis that's most important?
Sure, that's always kind of the first thing you really kind of look for too, right? It's a great way to kind of ground yourself in what you're looking at. And the one thing that didn't really jump out at me, but the one thing that was really great to kind of grasp a lot of data on was that triennial report, the one that does the mass accumulation of all the statistics across the country only every 3 years, right? So this is the first real look at that data since the pandemic, right?
Yeah,
They've been they've been producing this report for a couple decades now, and we've got some really good trends. We all have some very anecdotal kind of views on what happened during the pandemic from a payment choice perspective, from a way people kind of just view their money and view their payments. And we had little snippets of surveys and things, but this is kind of a solid, I guess, economy-wide set of data that shows exactly how many times a credit card was used and a debit card was used and a private label card was used. And it really highlights that change that took place, that inflection point that happened, that not only was it an inflection point, but it truly was a lasting inflection point, right? It wasn't just an adjustment based on certain circumstances that changed back to normal like a rubber band, right? It changed the inflection point, and now we've kind of got a new normal to look at, from a little less usage of cash, a little more usage of cards, change in the mix of the cards that are used though, based on other market conditions that are happening. So it's just, there was a lot going on the last 3 years. And this data really kind of gets down to, okay, we knew there was a lot going on, but it tells us a couple things that you kind of can pull out of it to say, well, that was something that may be in the a lot category, but really couldn't quite verbalize that piece. And that was something that we all knew was happening, but now there's data to back it up. So there were a couple of things like that were really kind of interesting to be able to pull from it. And then that the consumer choice report, that's always kind of a good companion study to this, because that really gets to how many times people choose to use cash versus card when they're paying. Right. And then it breaks it down by demographics, and you can kind of see whether things change with age groups or different types of cohorts, and it really kind of provides a complement to that, especially when it comes to, again, that kind of effect from the last 3 years and kind of where our new normal might be.
Right. And, I know myself, looking over the report and prepping for our interview, there were some data sets that, while anecdotally I may have actually thought were trending in a different direction, either they didn't decline or increase as much as I had thought, or actually it was a flip. The trend line was not what I was expecting at all. And I think that is also very useful to understand how some of these things that maybe feel anecdotally accurate based on how we experience the pandemic aren't actually matching up in the stats. And it says a lot about some of the resiliency of the way that consumers and businesses interact with payments that even the pandemic didn't really shift that much. So we'll get into that here. Let's go ahead and start with the payment study. So again, this is the 2022 Federal Reserve Payment Study, the triennial data one. So here's one part that stood out to me. So the study showed that the value of core non-cash payments in the US grew faster from 2018 to 2021 than in any previous measurement period since 2000. So that's big. And that one kind of aligns with what we expected to see from the pandemic, right? Non-cash payments grew faster. What do you think this says, though, more fundamentally about how payers are using their array of payment methods? And is that all pandemic motivated, or is this a reflection of sort of a larger trend line that was already going up?
Well, so yeah, the trend line was going up. I think the key part of that was that it went up faster this period than it's ever done in the past. And I think that's that combination of the already up trend line with, okay, there was a period of time where you couldn't do anything. Like you couldn't meet people, you couldn't show up face to face and hand over cash. And there was a period of time where there was uncertainty around whether using cash was even safe. And I think we debunked a lot of that stuff. But still, when there was uncertainty around a lot of things, so when there's uncertainty, you tend to pull back and be as cautious as possible. And it's the old adage about 3 weeks makes a habit, right? Yeah. It was a lot longer than that, so people had some habits that started to get ingrained, and then that really kind of showed itself in, well, now people are using cards, and especially debit cards, because that was kind of the subcategory that grew a ton. Over half of the payments in that study are debit card payments, right? 200 billion payments, over 100 billion are credit card or debit cards, and that really you kind of tie it around. Well, how did that happen? Well, people who might not have been in that unbanked or underbanked category now didn't really have a choice anymore. And they started to do that kind of entry level into kind of almost banked, right? any convenience store you go to, you can buy a prepaid debit card now at the counter, right? That's kind of that entry point that if you were unbanked or underbanked in the past, maybe you didn't even look at that because you had cash in your wallet and you're going to make payments for stuff, whatever. Kind of forced to make that choice now, and then saw the convenience and maybe didn't go back, right? So I think that's a good thing, right? You're introducing banking services to more people. You have a little bit more choice now. Now they can buy things on the internet. Opens a few doors. But I think that's kind of the thing that really kind of jumped out at me is that, more and more people are using it now. That trend line goes up even higher. I think you're going to continue to see that additionally, even as the economy expands, right? I mean, more people, more businesses, more payments in general. That number is going to keep going up.
Another stat that stood out to me that wasn't all too surprising, but had sort of a caveat that was like, I wasn't expecting that. It's about check usage. So check usage in general plummeted. However, despite the decline in the number of check payments, the average value of check payments actually increased substantially from 2018 to 2021. So I'm curious what role you see checks still playing for payers, whether consumers or businesses, and what these trends signal about how people are even using checks in their payment options.
Well, yeah, that was actually a really interesting data point that jumped out at me too. Right? Checks have been falling for a while. I mean, that's just kind of a general trend in the space. It just fewer and fewer opportunities to use checks as more and more options come into play. Whether it's people choosing cards over checks because more places take card than in the past. Businesses accepting credit cards has become a lot easier than it used to be, right? Back in the days of the, carbon slam thing where, you may be too young to remember that, but like, a lot of businesses wouldn't take credit cards, right? There was this old pizza place in Dayton where I grew up that just adamantly refused to take credit cards even into the 2010s. And finally they turn the corner and they take credit cards now because it's so easy to sign up to take credit cards where it wasn't in the past. That's where a lot of check usage would happen, right? You also had a lot of check usage, buying your Girl Scout cookies, right? When I was younger, I'd buy Girl Scout cookies with a check, or the donation to the PTO, right? Well, all those like the abundance of the person-to-person or peer-to-peer payments like Venmo and Zelle and all that kind of stuff, those are super easy for small organizations to sign up for. I literally bought Girl Scout cookies with Venmo, right? Because I didn't have to write a check anymore, pay my daughters in high school and pay her athletic fees through a Zelle payment, right? So things like that because it's so easy for organizations to sign up for it, it's become an option now. Those things have disappeared. The thing that struck me though was that the total value went up. So that kind of indicates a change, not just a reduction in checks overall, but a change in the use case, right? Because the value only goes up if the number of large value checks did go up, not down, right? So you're seeing all those small value checks eliminated, maybe grandma writing a $10 check for a birthday gift or writing a check for Girl Scout cookies or whatever. But you're seeing more checks at the high end, a few $1,000s, down payment on a car when you're opening a loan or things like that. So it kind of changes the overall use case of checks in general. And especially with the proliferation of like the mobile apps where you take the picture of the check to deposit in your account, those always have kind of caps that are fraud-based caps on how big the check can be. If it's over that, you got to take it into the branch. So the usefulness of that kind of starts to be, you're starting to kind of make it harder for consumers to use it if the number of checks they can use it on gets diminished pretty quickly. But also with the use case changes, now the overall kind of fraud, like the fraud rules you put around it also have to change, right? Because if the fraud rules are based on a usage pattern, and now that usage pattern is shifting, you're going to get more false positives, maybe some actual fraud slips through because you don't have the right rules. So there's a lot of analysis that's going to have to take place based on that whole changing use case that really kind of ensures that those kind of fraud rules stay up to date, all that kind of stuff. So there's a few implications from a consumer perspective as well as from a bank operations perspective that really kind of need to be looked at there. But it's a fascinating change, one that I didn't really expect to see.
Yeah, totally. Another one that stood out to me was the value of card payments also grew, and it actually grew faster in this 2018 to 2021 time period than any other measurement period for the payment study. The study showed that of those card payments, prepaid debit card payments, that was surprising to me, prepaid debit card payments grew at the greatest rate by value since 2018.
Like 20% or something year over year.
Yeah.
Like huge category.
I'm curious why, though. Why prepaid debit cards, especially, when you mention some of these other trends of ease of passing money along, paying with your phone, paying with your already existing credit card. Where does the prepaid debit card fit, and why do you think we saw such a boom?
Well, yeah, I mean, that's a great question. We're talking a little bit about, it being an entry door for banking services.
Sure.
So I think there was a large category of that was, people who used to, their entire economy was cash, who now needed a way to buy services, and that prepaid debit card was the easiest thing to go get because it was sitting there at the convenience store at the checkout counter. I think you see a lot of gifts that happen with that now. Like I kind of talked about grandma writing a $10 check to her son or whatever, or grandson or whatever, but I don't think grandmas are giving gift cards, but I think you do see a lot of gift cards being given as gifts, which are the prepaid debit cards and things like that, especially for like graduation gifts and all that kind of stuff. And then there's also, it's a good entry point for kids to teach them, financial responsibility, as well as kind of how to navigate making payments with things other than the $20 bill that you have in your pocket, to open the door to banking services for them too. So I think there's a lot of use cases there, and I still don't think we know all of why that was. Part of the reason was the number was relatively as a small base, but a 20% year-over-year growth for a 3-year period is going to get that small base up pretty big relatively quickly. So I think that's also one that really kind of bears continued kind of watching, just to kind of make sure that it doesn't kind of cause problems if you make assumptions that now aren't true, right? About how kind of all those cards interact with each other.
Right.
And like the other side of that coin in the credit card space, one of the things that really dipped that kind of was a little bit shocking but made sense when I thought about it was the private label cards. Like the cards you used to get, like if you went to Best Buy and it was a Best Buy only card that wasn't anything you could use anywhere else, or at Macy's or things like that. The biggest value that those cards really provided was kind of that layaway style. That was the evolution of layaway, right? Before those existed, you'd be bought on layaway or whatever. Again, you might be too young to know that. But
what was funny, I actually had to buy on layaway for furniture at a used furniture store not too long ago. So that was my one and only experience with layaway. So,
but it kind of evolved into those private label credit cards too that stores offered. But with the proliferation of buy now, pay later style opportunities, with a lot of different places offering that functionality, those private label cards, that was probably the biggest decline out of any of the categories, was that private label card usage too was really low. And that kind of surprised me when I saw it, but then I'm like, it kind of makes sense now when I see that happen.
Right. Yeah, and again, a lot of these are just reflections of the dynamics for how consumers are already paying and how they're being incentivized to pay, and really extensions of, it's not like you wake up one morning and say, you know what, today I've decided I'm not going to use my debit card anymore. I'm going to use peer-to-peer payments, or I'm going to use my credit card or whatever. It's more a reflection of how the ecosystem where they spend their money is changing the services that they provide. And so if they are providing, for example, buy now, pay later services, and that's becoming more of a standard and it's convenient and easy to use for the consumer, then they're probably going to stop using the private label cards, right? It's not like a focused shift away from private label cards. It's a consequence of an improvement to the customer experience. Yeah, right.
Yeah, a lot of it is the customer experience, and I even think that ties back to the prepaid debit card thing, right? If you think about 5 or 6 or 7 years ago, what did people use prepaid debit cards for? It was basically just a point of sale usage. Right. But again, over the last few years and the proliferation of buying things online, first out of necessity and then out of, now it's more convenient than running to the store all the time because the delivery is included and all that. Right. There's utility in a prepaid card that wasn't there in the past. So it's a little bit more useful. There's a little bit better customer experience wrapped around it, even though at its core it's still the same thing. That's going to drive usage up.
Another trend from this survey before we jump to the next one is that, and this might be one that Hyosung Innovue has even more specific insight into, but the number of ATM cash withdrawals apparently dropped substantially from 2018 to 2021. But much like checks, the average value of that ATM cash withdrawal actually went up. So it's not necessarily that it's less useful, it's just, again, the use case, the reason why you're going to the ATM has shifted. So I'm curious what I'm curious what you think this says about people's relationship to cash and the evolving ritual of going to the ATM, getting that wad of bills, and then doing something with it,
Yeah, well, and that kind of ties into then the second report as well on the consumer payments survey. But people are going to the ATM less often. There are fewer transactions, but they are getting more out when they go. Part of that, I mean, a little bit of that's inflation, right? You need more money to buy the same things that you bought 5 years ago. But there also is a part of it where when you look into that payment choice survey, people are holding more cash. People are having more cash on them than recently. It's kind of been one of those that went down and now it's kind of going back up again. And then you pair that with data that the Federal Reserve releases every month about the amount of cash in circulation, which has continuously gone up every month for the last couple decades. And you kind of see this kind of view of, well, there's still a whole lot of cash circulating in the economy. The numbers show it being used less often, but that's because as a portion of payments. But a big part of that is not because it goes down a lot from a payments usage perspective, but because the other categories have gone up, as you talked about already, so dramatically. Like debit card usage went up dramatically over the past 3 years. So even if you're using $5 in cash to pay for that pack of gum at the convenience store, the same amount of times, the proportion is going to be lower, right? And it really kind of then reinforces the fact that, I've been doing banking style stuff for a couple of decades now. And even when I started, people were talking about how cash is going to go away. We're going to be a cashless society. And cash, it just reinforces the fact that cash isn't going away. It's still a fundamental, foundational part of our economy. There's a whole lot of other payment methods that are used way more often than cash. Let's be honest, that's what the data tells us. But cash is not a small part of the economy. It's a really big part of the economy. And it's there's a lot of still reasons why people choose it. Privacy, security. Like one of the biggest ones is still, it's the best way to budget. Like if you have a budgeting problem, the best way to budget is to take that cash and say, this is how much money I have to spend until the next time I get more, and next time I get paid or whatever. And you can't overextend yourself if you're budgeting with cash because it's impossible. You can overextend yourself on a credit card. So there's a lot of things about it that make it an integral part of our economy that means it's not going to go away. It's going to be a smaller portion, but it's still going to be out there a lot.
Totally. Any other major findings from this survey that stood out to you before we jump over to the next one? Anything we haven't touched on yet?
Well, I mean, I think that hit the big one. The checks, and the debit cards were the prepaid debit cards were the two things that really stood out. I mean, like I said, they've been doing this data collection for decades, and this was the first time that the number of checks was the smallest category out of all of the categories. So that was really something that kind of struck me. And the other side of that cash isn't going away coin is that I think checks, they're starting to kind of get into that they're going to be going away relatively soon thing, because as the number gets lower, the technology around it, it's a more expensive per use style of technology now, because now you're not putting as many checks through it as you used to, but it's still the same machine. So now it's, there's going to be less and less investment in advancements in that technology because there's a lot less volume there, which then is going to disincentivize people from using checks more. And it's kind of that kind of self-reinforcing cycle that eventually we're going to follow the path of some other countries that have almost gotten rid of all of them. And that may be now a special use case where it's only, a vehicle for large payments and things.
Right. But then even then, I feel like the customer experience, the consumer experience of using a check often feels a little stressful. It's because especially like you're typically not passing along $20 on a check anymore. It's usually something a little more substantial. You don't have that cash on hand, or I don't know, maybe you're just conditioned to, instead of sending that over Venmo, you're 200 or 300 for X, you write the check, boom.
Well,
right?
It's already been baked into some banking operations. Like, I mean, I can remember opening my first account, and the very first thing they did was, okay, here's your box of checks, and here's how to use checks, and because that was like a cornerstone.
Well, that's how I find my routing number for whenever
exactly.
anyone asks me for it. I was like, okay, I got to find my checkbook.
Got to find my checks.
Yeah.
And my daughter in high school, she just opened a high school checking account.
Right.
They didn't even ask whether we wanted any, let alone provide them.
Right.
It was just, here's your debit card. Now you have a checking account, even though there's no checks. Here's your checking account.
Right.
So the name is still there from a legacy, but it's like the operations have already adjusted from a consumer standpoint to disincentivize use because it's harder to get them. There are other options that are easier to use. It's going to kind of self-feed that cycle as it continues.
For sure. And I feel like the safety part of the customer experience is not that strong with checks. You know, once you pen in and sign that there's $500 associated with this slip, then what happens? I would love to see some stats on fraudulent check numbers and how those are trending in the US, but I know even just anecdotally, it is a stressful experience to go drop off a check in the mailbox for your, landlord, or to deliver that check to the, parent-teacher organization to help fund the school play, because there's just something that, there is the possibility that envelope just gets lost, or someone nabs it and cashes it for themselves. And I mean, there isn't that level of, big question mark when you send something even over Venmo. Like if you've got the confident username, you're sending it to Bill Buddy. So, that's probably not going to get intercepted. And if it does, then that's probably not the fault of the actual experience or ecosystem. It was a bad actor at play. But checks, I think, carry more of that, stressful experience.
Well, and that's also something that comes with debit cards and credit cards is the built-in fraud infrastructure on that network that protects the consumer. Even if there is fraud, it's it's footed by the network, not by the consumer. Where sometimes with checks it can be a little more difficult, and that is a significant fraud vector with the mobile app pictures, because the ultimate check clearing is still driven by who owns the piece of paper. So if you take a fraud vector being if you take an image and then you go try to deposit the paper too, so you get two deposits out of it. That's why the limits on the apps are low, because they try to limit that as much as possible.
Yeah, it's interesting seeing these dynamics play out in real time, and I have a feeling, I agree that checks will see the grave soon.
Yeah. At least sort of. They'll probably still kind of be like an appendix. They're vestigial there. That
a cashier's check.
Every once in a while, it's like you never say totally gone, but for general purposes, you're gonna see it pretty much be an afterthought.
Yeah.
I think.
All right, next survey that we're going to speak on is the consumer payment choice findings. So let's just jump right into it. This study showed a continued shift towards credit card payments into 2023, which I think is pretty in line with other trends we're seeing. It's in line with the other survey. However, the use of debit cards and cash did hold steady at 2020 levels. So even though credit card use was up, it wasn't at the expense of cash, or at least not at the expense of cash significantly, to the point where it's like, wow, people are really replacing their cash payments with credit card payments. It seems more like they're taking more into credit card payments, but their use cases for cash are remaining somewhat steady. What are your thoughts there? Does that reflect on what you're seeing as well? Anecdotally, was that surprising to you, or in line with what you were expecting?
I think it is in line, again, based on what we see as we continue to kind of, one of our biggest businesses is machines that help handle cash, right? Whether it's for a retailer or for a bank. We're continuing to see a focus on trying to do that as efficiently as possible, because moving those pieces of paper around and counting them and reconciling them, it can be hard, error-prone, lots of labor involved. So we are seeing a continued demand for that kind of stuff. The one thing that was kind of interesting to me when you kind of compare history, that they show kind of year over year in that report as well, and like 5 or 6 or 7 years of history too. is that, again, as expected, that 2020 survey really showed a decline at that initial bump down in cash usage down to about that 19% level. Right. But then it's kind of held steady the last few years, as you mentioned. And I think that kind of creates a data-centered floor, I think, for cash usage, where it's, if it were going to go lower, it would have, because that force of the pandemic would have pushed it as low as possible. And I think kind of that kind of revealed where the floor is, where we're probably not going to go below that considerably. It'll probably still vacillate a percentage point or two just based on the survey, but I think you're still seeing a good fifth of the economy being cash-based, at least from a kind of transactional perspective. Yeah. And it still kind of bears out in some of the data points you see around it. The average cash transaction is small. It's still a preferred payment method when you talk about a small $5, $7 transaction, because, again, when you talk about the customer experience, really the customer experience trumps all, right? And, if you're talking about a $5 spend, it's easier to hand over a $5 bill than get your credit card out and then have that show up on your statement. And the depending on how detailed you are with reconciling your bank statements, that's just a whole nother kind of, you got a whole list of now small transactions on your credit card. Some people are okay with that. Some people, it really kind of gums up their view of their own financials.
Totally. A 5, a 2, a 3, yeah. A 5, a 10. Here it's like, yeah. Okay.
And then the other thing that you kind of see with cash too is that there's a whole category of spend where it's something where I don't know how to exactly describe it, but things that maybe you can't 100% justify sometimes, like a splurge payment or something.
Yeah. You want to not look at it on your bank statement.
Well, that's exactly right. Right? I spent $60 on this thing because I really wanted it at the time, but now I kind of, I'm not sure whether that was, something I want to go back and see when my statement comes. I just want to spend it and then enjoy my purchase.
And that's
right?
A social dynamic.
It absolutely
it's less to do with the actual payment trends themselves.
But it's
your point,
but and it's a social dynamic that's still going to be there for a while.
Exactly. Right.
And I'm not even trying to cast it in a negative light. I've done that myself. I'm I'm an old guy, but I still like baseball cards, right? So if I'm going to drop some money, sometimes I'd rather pay cash just because I want to enjoy it and not then be reminded 3 weeks later that I spent that much on it.
Yeah,
no,
right.
I just want to enjoy it in the moment, right? So
totally.
I think there's definitely a social component that contributes to that floor of cash usage that's going to be a pretty significant part of it, with staying power for as long as we can see. And I think that really kind of then speaks to the point that because that's going to be out there, people and businesses all have to be ready for being able to process all that stuff.
Right. Cash is not going away.
Right, yeah.
It's just maybe the role it plays socially or within the ecosystem of payments
right.
will evolve, but I think the end of cash would have to be forced. It won't be a natural relinquishing because consumers have a relationship to it, to your point.
That's very true.
To your point. So another trend that stood out in this the consumer payment choice finding study, despite that shift in preference toward credit cards, there actually remained a pretty fundamental level of demand for in-person payments, meaning that these payments aren't all happening online. It's not just your credit card information being used for e-commerce, being used for grocery delivery, but you're tapping, chipping, or swiping your card. The study showed that the share of in-person purchases remained steady since 2020. So what would you say remains popular about in-person purchases, especially with the reality that there are so many other convenient services that remove that need to go to a store and pay? You can use your credit card online, again, for e-commerce purchases, delivery purchases. So why that steadiness in person?
Well, I think that's also a social construct too, and maybe I'm speaking a little bit more for myself than anything else. But even in general, though, I mean, people are. It's a community. We're a community species, right? We like to be around other people. And part of that is your kind of daily habits with buying something or going to the grocery store and maybe running into your neighbor at the grocery store as opposed to sitting on your couch and, ordering the 17 things So sometimes it's that. There's a fee-based aspect of it as well, where I've been going to the grocery store my whole life. Why should I start paying a $15 fee for someone else to do my grocery shopping now? I go to the grocery store. I kind of like picking out the fruit that I buy instead of just kind of not wanting to participate in that experience. Sometimes there's a convenience aspect where I don't have time, and then I would fall back on that. So it's nice to have the option, but it's not something that I've converted to. And judging by the times when I go out there and experience that myself, it's not something that a lot of people have converted to either, except for when there's a reason to do it. I think there's a tactile nature to buying things a lot of times too, especially things like splurge purchases or even clothing type things, right? There's something to be said for being able to pick up a shirt and hold it up against yourself to make sure it's the right size, or maybe even try it on before buying it. Although
sending back a dress that doesn't fit is
and because we're starting to see businesses that don't provide free shipping for returns anymore, because there was a kind of population of people that were getting into that habit of, I'm going to buy it in 4 different sizes, then return the 3 that don't fit. And businesses kind of caught on to that and said, well,
this is a logistics nightmare.
It's a logistics nightmare, and we're losing money on it because I only sold 1 dress, and the return shipping ate up my profit for that sale and then some. So once that goes away, now there's going to be less convenience associated with buying online anonymously, and now I'm going to go back to the store again. But there's also just some things that like food, for instance, right? If I'm going to go out to eat, sometimes it's nice to have food delivered, but there's still an experience associated with going out to eat. And plus, the food comes straight from the kitchen to your table, as opposed to being in a car for 15 minutes to get to you, right? So there's a level of freshness, as well as a level of the experience of community, of being with people, that for pretty much all of those categories, whether it's retail, whether it's food, whether it's services, there's an in-person aspect that makes the experience. And then there's other things that you can never do, like paying for gas. You're never going to be able to do that online, right? I got to do that in person. And and the whole reason convenience stores exist is because people then, I'm here, I might as well buy myself a soda and a pack of gum, right? You're going to do that in person because you want it now, as opposed to waiting 3 days for it to be delivered. So I think there's a whole category of things that are I don't want to wait 3 days. I want it now. I'm going to buy it now.
And again, that's an extension of the customer experience.
Yes, exactly.
If your social relationship to that payment hasn't changed, even with the proliferation of new convenient ways to pay, maybe now instead you're tapping your phone instead of swiping your card, but that fundamental, I can just pay online for my gummy bears. If anything, that's actually more of a hassle. I don't want to go log in and go and swipe. I just want to go, okay, I'm done.
And then 3 days later they come and they're like, wait, why did I buy these again? Exactly. I don't want them now. I want, But even the integrating the tap into the card has made payment, that customer experience at payment, the tap in the card arguably be easier than the phone tap in a lot of cases. Right. Some of the digital wallets have mastered that kind of customer experience where it's as easy as tapping the card, but the card is just so easy because it's single use. There is no password to get into it. It's just boom, and I'm done, and it's back in my wallet. And that has also made it so much easier to pay in person, just because it's a very simple experience. You're done and you're on your way.
Totally. I would say for folks out there designing the node where you do tap, sometimes it's hard to know where to put my card.
Yes, that can be true. Yes.
I go like,
yeah.
So
where's the antenna at?
Yeah, right. Put some signage on those things, guys. Put some signage on there. Okay, so I think the last major trend I wanted to highlight here was that cash payments, we did see some dips. So for example, a number of in-person payments at retailers returned to pre-pandemic levels, but the number of cash payments did not. Right. So, cash in general was steady, but in a retail context, we did not see a recovery of cash in the same way that we just saw in-person payment in general. Mm-hmm. So why that discrepancy, right? And what do you think this signals?
Well, I do think there's a customer experience aspect to that, right? When you had to open your wallet and get the card out and actually hand it over to somebody versus get cash out and hand it over to somebody, those experiences are almost equal. So sometimes people would have a preference, but sometimes it literally came down to you open your wallet and make a snap decision. Oh, I've got $40 in here, I'm going to pay.
Which are my four cards versus my cash
right.
versus my thing.
Which, now with the tap embedded in cards even, as well as digital wallets, it's become such an easier customer experience. You check out and you've tapped already in the middle of the transaction, and at the end, then it's already done. And there is you don't have to worry about counting it out of your wallet and handing it over. So there's some aspect of that has eroded a little bit of the cash usage in person-to-person retail payments, because that experience continues to become incrementally better. And it's really smooth now, so I'm not sure how much better it can get unless they kind of deliver a lollipop to you while you're doing it or something. I don't know, right. but it's a very smooth, very easy experience now to tap your card in the middle of a transaction, then to have it be done right at the end. That I think that has led to then people continuing to choose that more often, because it is not totally equal from an experience standpoint anymore. Because if you do cash, then you got to hand it over and they got to count out your change and hand it back and all that kind of stuff. Some people prefer that, but there's an ease of experience with the tap that now becomes something that is going to continue to grow that category.
Okay. So those are the main points I wanted to hit on from both of the surveys, but I want to ask them now sort of larger questions to take those data points and formulate some strategy. So with now like our data points fresh on the mind from these two reports, what do you think these signal about some of the underlying trends in payments? Mm-hmm. And how should financial institutions be interpreting some of these signals, especially some of the big ones like check decline, cash steadiness, debit card usage increasing, in-payment purchases remaining steady or increasing? Generally, what do you think should be the response or strategy to all of this?
On the card side, I think, as that volume continues to go up, right? I think there's going to be space for banks to differentiate themselves on the types of cards they offer, right, to grab more of that wallet share. Nice. Whether it's rewards on the back end or whether it's the experience on the front end, the card usage itself. Those are all the tried and true things, but even, new ways to actually use your card and integrate it into your day-to-day life, whether it's, so one thing that pops out, right, is that like mobile wallets forever have kind of been dominated by Google and Apple and Samsung, the things that come on your phone, right, because they kind of own the phone. It was easy for them to kind of preload it and start that kind of the digital wallet kind of, sure, usage. And we've seen with this kind of that consortium of banks that have kind of gone in on this new digital wallet that's coming out later this year. Banks saying, hey, we want a little bit of that. We want a little bit of that business too. Right. And there's a chance for banks to integrate it in a different way that a phone company would integrate it, that could potentially have some advantages on how consumers view their finances, how they kind of give them advantages in how they manage their financials, because it's integrated with the bank, not integrated with the piece of hardware that you keep in your pocket. Right. So I think there's an opening there that can really take advantage then of all of those credit card transactions, because a lot of them do stem out of a digital wallet now. It's still, right, a credit card transaction, but it stems out of a different use case. Totally. And there's an opportunity for banks to kind of capture some of that market share. Sure. And then on the cash side, again, we talked about how I think there's this kind of floor where there's still a ton of cash flowing through our environment. And, being able to handle and manage that stuff as efficiently as possible, and even kind of, getting that off of your mind as a business owner, whether it's a retailer or whether it's a bank, yeah, being able to manage that in a more efficient manner is going to be critical. As efficiency just continues to play an outsized role in how successful companies are, right? So being able to do as much automation around some of that as possible is going to be key, especially when you're doing it at scale and you're moving lots of those pieces of paper with green ink on it, right? It's just, you're moving them around and you're counting them and you're sorting them, and the more you can do that in an automated fashion, the better off you're going to be from an operational efficiency standpoint.
Totally. So then, beyond some of the services you just mentioned, are there any other services that you think financial institutions should adopt, or sort of mold in response to these trends in payment methods? Anything that you see on the horizon that's going to be key to responding to some of the ways that consumers are engaging with their different payment methods?
Well, I think kind of on a related track, right? We've talked a lot about consumer experience being an important aspect of how consumers choose anything, right. And I think especially banks as we continue to move forward here, the data that this shows is just another data point that says consumer experience is really what drives consumer choice in pretty much anything, and there's a lot of experiential benefits in doing things with cards now that didn't exist a few years ago, and continuing to drive that experiential benefit forward, whether it's on payment card or whether it's just in your branch experience, or whether it's the experience you have when you talk to a financial advisor. Kind of that's all wrapped up in a consumer's opinion of the business they're doing business with, whether it's a retailer or whether it's a bank. And I think taking that into account and really kind of continuing to push that experience forward, whether it's making the credit card as easy to use so it becomes top of wallet for a customer, or creating a digital wallet that has new and innovative experiences that are above and beyond what a phone hardware provider can do, or whether it's making cash as easily and accessible as possible so that customers, when they want to use cash, it's there for them. But at the same time, it's not gumming up operations in the businesses that they're doing business with. Right. All kind of contribute to that positive customer experience that's going to drive continued growth.
Totally. So then, given these trends, what do you see as the future of ATM solutions in that ecosystem, and how is Hyosung Innovue playing its part in responding to this pulse check?
Yeah, so that's kind of, the cash automation piece is really kind of one of our foundational pieces of technology, right? And so that's something that we continue to kind of push forward on from a capability perspective, and starting with introducing recycling into the market a few years ago on self-service devices like ATMs, but really kind of continuing to push into putting automation tools even around the managing of the ATM, so that it's easier to get cash in and out of it, easier to reconcile that cash, easier to manage how much is necessary, putting the intelligence around usage trends, so that banks can know exactly how much they have to have so that they're not going to run out and continue to service their customers, while also putting those in boxes, for lack of a better word, that provide an experience to their customer that is on par with what they expect when they utilize self-service devices, right? It needs to convey a sense of currency, or not in the sense of cash currency, but in the sense of current in the environment, like current technology. It needs to convey a sense of technology, the same way that walk into McDonald's and you use this big, huge screen to order your meal now. It's got to convey the same style of up-to-date technology that customers have learned to trust in every other business. Totally. While also doing all the heavy lifting that a bank has to do. That when you're ordering at McDonald's, all they got to do is tell the kitchen what food to give you, right? They're not having to count tens of thousands of dollars inside a machine and keep it all sorted and stored, right? So the load on an ATM is a little more, but it's still got to be, the experience has still got to be top notch. It can't just be the same old ATM that people have been using for 60 years. Totally.
Yeah, I totally agree. And again, I think if financial institutions, if ATM solutions providers, regardless, anyone that is having to respond to these trends, if they really look at how they're reflective of the consumer experience, which ones of those are motivated by just new technology and the efficiencies they bring, how many of those decisions are motivated by sort of social norms and social relationship we have to payment, and then crafting their solutions and strategies to match, I think that will give them the most accurate reflection of how to make the right changes and where to find, areas of consistency in their solutions too. Things that don't need to change, even if it feels like this new technology is the most efficient, way for a consumer to pay for this. Well, if the social aspect of it doesn't really encourage them to pay that way, maybe don't force the change on it. Maybe adapt elsewhere, maybe provide an option, but play a little bit more of tug of war a little bit, I guess, with the motivating change and with the role that the consumer's own choice actually plays in shaping these trends in the first place.
I think you're right on. And it really, the worst thing to do is to develop technology just a solution for solution's sake, right? Sure. You really have to kind of look at the environment and what you're trying to solve, and that really kind of has led us to starting to develop things that are outside of the ATM, that are augmenting the ATM operational experience to make it even more efficient and more kind of automated from start to finish, the entire cycle, as opposed to just once the cash gets inside the box. Okay. Because you got to look at the experience that happens in every facet of that bank branch or every facet of that retailer when they're having to, reconcile their books, do their end-of-day closing, do their kind of daily deposit into the bank, whatever. Putting the stuff in place that solves a problem, that makes that stuff easier, makes it more efficient. That's the thing that's then going to resonate, and then either give that bank or give that retailer time back to then focus on their customers, because that's what they want to do. A bank doesn't want to count money. A bank wants to focus on their customer and give them the services that they need. And every minute they're moving a pile of money from one location in the branch to the other is a minute that they can't be focusing on a customer. So, more than just ATMs, providing the services all around them for anybody that is moving a lot of cash within their walls, a retailer, even a sporting venue, or a bank branch, to not have to worry about that operational aspect and really kind of focus on the experiential aspect.
Well, I think with that, we can go ahead and wrap up the conversation. I think that is a pretty good, just high-level breakdown of both of these surveys. I do recommend to our audience that y'all dig into these surveys yourselves, because there were a lot of metrics we didn't touch on.
Yes.
Yeah. We probably could be chatting for 3 hours if we really broke down each data point. So highly recommend y'all check those out. We'll obviously link them in the posts here with the podcast. But again, Bill, thank you so much for joining us. Thank you so much for helping us break down, again, the Federal Reserve Payment Study of 2022, the Triennial Data Survey, and the Federal Reserve 2023 Diary of Consumer Payment Choice Findings.
Well, thank you. It's always a pleasure to be here. Thanks for having me.
Of course, real pleasure. And if folks want to pick your brain anymore on this, where can we point them to?
Well, at our website, Hyosung.com, we've got contact us features as well.
Great.
And as you mentioned, we've got a lot of content on there, from all of our historical podcasts to some other kind of instructional videos or feature videos, and even some blog posts on with some background on some of these topics too. Perfect. But definitely also have a contact us feature where you can get in touch with us and kind of ask us questions and spend some time talking to us about the features and functionality we have, as well as just the industry in general.
Love it. All right. Bill Buddy, VP of Banking Strategy and Solutions at Hyosung Innovue. Always a pleasure getting to chat. Thank you for coming in studio, and I'm looking forward to the next one. Always more to break down.
Always.
I love it, man. Thank you again.
Yep.
And thank you, everyone, for joining us on another episode of Banking Experiences Elevated, a Hyosung Innovue podcast. If you like what you heard and saw today and you want previous episodes of the show, make sure that you're subscribing on Apple Podcasts and Spotify, and of course, heading to our website, hyosunginnovue.com. On there, you'll also find, like Bill said, plenty of resources and other episodes of the show, future and previous. I'm your host, Daniel Litwin, the voice of B2B, and we'll catch you on the next episode of Banking Experiences Elevated.